AI revenue has lower gross margin than the rest of our business, unquote. We expect operating leverage to benefit us at the operating level even as gross margins deteriorate. So it looks like the AI bubble may have popped this week. And this was after Oracle and Broadcom both released their earnings reports. AI stocks took a hit across the board. NASDAQ ended up down about 2% for the week. And after all that, I'm buying this dip, and I'll explain why. All right, so let's get to Oracle first. They reported for Q2 their RPO, which is their remaining performance obligation. Essentially, this means customers who are committed to Oracle's services legally, they're waiting to be serviced by Oracle, and upon which they will pay them. These are revenues that Oracle is expecting to receive, meaning customers have signed on, they're not going away, aka it's a backlog. They're just waiting for Oracle to get to them. In Q2, this was valued at $523 billion. It's up 433% year over year. Or to put it in perspective, they're up $68 billion from the previous quarter. That's a 15% jump from the previous quarter. And their total cloud revenue, which includes apps and AI infrastructure, up 33% in Q2, $8 billion. Cloud revenue now represents half of Oracle's overall revenue. So their total revenue for Q2, $16.1 billion. That's up 13%. That's also their third consecutive quarter of double-digit revenue growth. Okay, so let's get to some of the lowlights. Free cash flow for Q2 came in at negative $10 billion. Capex spending was reported at $12 billion. They stressed that this was going to be dedicated to data centers that generate revenue specifically. This was not for land leases, power bills, or other buildings. Okay, so Broadcom, in terms of total revenue, $18 billion for the quarter. That's up 28% year over year. In terms of their data center business, they have a backlog of $73 billion, and that's expected to be delivered over the next 18 months. And they mentioned more bookings would be possible within this time frame. They project for 2026 Q1, AI revenue would be $8.2 billion, and they said that's a 100% increase year over year. Let's get to the lowlights. This brings us back to the gross margins. They reported 68%. However, this was a decrease of 0.1% from the previous quarter. To quote them on their earnings call, AI revenue has lower gross margin than the rest of our business, unquote. We expect operating leverage to benefit us at the operating level even as gross margins deteriorate. They're going to be using components that they don't own in order to provide service for their customers. As a result, it's eating into their profit margin. Like I said before, I'm going to buy this dip. Based on these earnings calls, the demand for AI is through the roof, and it continues to be through the roof. Having said that, I think it boils down to fundamentals. I said I was going to buy this dip, and I will. However, I don't see myself buying Oracle or Broadcom just yet. It leads me back to Google. In my previous videos, I said it before, Google's fundamentals looks pristine. I'm going to continue to load up on Google stock. There's an old adage on Wall Street: bears can make money, bulls can make money, but pigs get slaughtered. And I think that's the case with this.